Hello everyone and a very warm welcome. Today's chapter is something that is extremely practical, something that businesses deal with every single day. We are talking about the e-way bill. By the end of this chapter, you will know exactly what an e-way bill is, when it is required, how it is generated, how long it is valid, what happens when it expires, what goods are exempt, and how the system enforces compliance through verification and blocking. This is a very rich topic, so let us get started. As always, let us first understand what we are going to cover in this chapter. Looking at the slide, you can see 11 major topics laid out for you. We start with the most basic question: what is an e-way bill? Then we move on to the documents required for the movement of goods. After that, we look at when exactly an e-way bill is required, understanding the consignment value threshold. Then we go into the structure of the e-way bill itself, which has two parts, Part A and Part B, and we will study both in detail. We will then cover updating Part B when there is a change in vehicle, the consolidated e-way bill for transporters carrying multiple consignments, and the validity period of the e-way bill, which is a very exam relevant topic. We also discuss extension of validity in exceptional circumstances, acceptance or rejection of the e-way bill, and situations where an e-way bill is simply not required. Finally, we look at the inspection and verification process for goods in transit and the blocking and unblocking of the e-way bill generating facility. These topics together will give you a complete end-to-end understanding of the e-way bill system. Let us begin. Before GST was introduced, movement of goods across state borders required the transportation to pass through checkposts. Physical barriers at state borders where goods vehicles were stopped, documents checked, and sometimes taxes collected. This was a massive source of delay, inefficiency, and corruption. Trucks would spend hours, sometimes days, at checkposts. It was an enormous burden on trade and logistics. When GST was introduced, one of its most transformative features was the abolition of all state-level checkposts across India, and to replace those checkposts with a digital, transparent, real-time tracking mechanism, the e-way bill system was introduced. So what exactly is an e-way bill? As the slide tells us, an e-way bill is an electronic document generated on the GST portal that evidences the movement of goods. It is essentially a digital permit that travels with the goods, confirming that the movement is backed by a proper invoice or document and that the relevant taxes have been or will be paid. What are the key highlights of this system? First, all checkposts across India have been removed. Goods can now move freely across state borders without physical stoppage, as long as the e-way bill is valid. Second, there is real-time tracking of goods movement. The department can monitor which goods are moving, from where to where, in what vehicle, and with what value. Third, easy verification by tax officers. They can check the e-way bill electronically without even needing to physically inspect the vehicle in most cases. And fourth, the system minimizes tax evasion by ensuring that goods are always accompanied by proper documentation. Now, what is the legal framework? The e-way bill provisions are governed by Section 68 of the CGST Act and Rules 138 to 138E of the CGST Rules 2017, which form Chapter 16 of the rules. Importantly, state GST laws also have similar provisions because intrastate movement of goods is governed by state rules. So the e-way bill system operates at both the central and state level. All right. So we have understood what an e-way bill is. Now let us understand the basic statutory requirement that triggers the entire e-way bill framework. Section 68(1) read with Rule 138(1) states that the person in charge of a conveyance, that is, the driver or anyone responsible for the vehicle carrying goods, when carrying a consignment of goods worth more than 50,000 rupees, must carry certain prescribed documents and devices during transportation. This is the foundational provision. Any consignment of goods exceeding the value of 50,000 rupees must be accompanied by the required documents. The specific documents are listed in the next slide, which we will see in a moment. But the key principle is, if your goods are worth more than 50,000 rupees, you cannot simply put them in a truck and send them off. You must ensure the proper paperwork is in order and traveling with the goods. Think of it this way. The e-way bill is the passport for goods traveling on Indian roads. Just as you cannot travel internationally without a passport, goods worth more than 50,000 rupees cannot travel on Indian roads without an e-way bill. Now, let us get into the specific documents that the person in charge of the conveyance must carry. Rule 138(a)(1) tells us clearly that there are two things that must be carried. First, the commercial document, which is either the invoice, the bill of supply, or the delivery challan, depending on the nature of the transaction. Second, the e-way bill itself, which can be in physical form as a printed copy or in electronic form on a mobile device. So the rule accepts both printed and digital versions of the e-way bill. You do not always need to carry a paper copy. Now, there are some important special provisions here. For imported goods, Rule 138(a)(1) second proviso, if the goods being transported are imported goods, the transporter must also carry the bill of entry and must mention the bill of entry number and date in Part A of the e-way bill form. This is because imported goods have a customs clearance history and the e-way bill must reference that. There is also a very modern provision under Rule 138(a)(2). If an e-invoice has been issued under Section 48(4), the supplier can show the QR code along with the invoice reference number or IRN electronically instead of carrying a physical tax invoice. This integrates the e-invoice system with the e-way bill system beautifully. Another practical provision, there is no need to carry the e-way bill physically when goods are transported by rail, air or vessel. However, the e-way bill must be produced at the time of delivery. So for rail and air cargo, the requirement is at the delivery end, not during transit. Then there is the RFID requirement under Rule 138(a)(4). Certain notified transporters must embed RFID devices on their vehicles and link the e-way bill to the RFID before goods movement. This enables automated contactless verification. The RFID reader at a checkpoint reads the device and instantly verifies the e-way bill without stopping the vehicle. And finally, under Rule 138(a)(5), in specific cases, the Commissioner may allow transporters to carry only a tax invoice, bill of supply, bill of entry, or delivery challan without an e-way bill if the goods are being moved for non-supply purposes like job work, repair, or testing. This is an administrative flexibility for genuine business operations. Now let us understand the core trigger for generating an e-way bill. When exactly is it required? Rule 138.1 answers this question. An e-way bill is required when a registered person causes the movement of goods of a consignment value exceeding 50,000 rupees. Notice the phrase registered person. This means the obligation is primarily on registered dealers. The movement of goods can happen in three types of situations: in relation to a supply which covers normal sales, for reasons other than supply such as job work, branch transfers, repairs, or exhibition, and due to inward supply from an unregistered supplier, where a registered buyer receives goods from an unregistered seller. Now, who is responsible for generating the e-way bill? Specifically, the Part A details before movement starts. The supplier, if they are the one arranging transportation, the recipient, if they are arranging the transport, or the registered buyer, if they are buying from an unregistered supplier. Before movement starts, the responsible person must enter the details in Part A of Form GST EWB-01 to generate an e-way bill number. Let me also explain the consignment value calculation. This is important. The consignment value equals the invoice value as per section 15, that is, the transaction value plus the GST amount, which includes CGST, SGST or IGST and cess. One crucial point: even if a single invoice contains both taxable and exempt goods, the value of the exempted goods is excluded from the consignment value calculation for determining whether the e-way bill threshold is crossed. So, if your invoice has taxable goods worth 40,000 rupees and exempted goods worth 20,000 rupees, only 40,000 rupees plus the applicable GST is counted for the threshold. We just learned that an e-way bill is generally required only when the consignment value exceeds 50,000 rupees. But there are three important exceptions. Two cases where an e-way bill is mandatory even below 50,000 rupees, and one case where it is voluntary. The first mandatory exception is for interstate job work transfers under the third proviso to Rule 138.1. If a principal, that is a manufacturer, sends goods to a job worker located in another state or union territory, an e-way bill is mandatory regardless of the consignment value. It could be goods worth just 5,000 rupees. Still, an e-way bill is required. Either the principal or the registered job worker must generate it. The reason for this is that interstate job work movements have significant revenue implications, and the department wants to ensure these movements are tracked. The second mandatory exception is for interstate handicraft goods transfer under the fourth proviso to Rule 138.1. If a handicraft artisan who is exempt from GST registration under section 24(1) and 2 is transporting handicraft goods to another state or UT, they must generate an e-way bill. Again, regardless of the consignment value. This provision captures movements by small artisans who may otherwise fly under the radar. The third situation is voluntary e-way bill generation under the first proviso to Rule 138.3. Even if the consignment value is below 50,000 rupees, any registered person or transporter may voluntarily generate an e-way bill for tracking and compliance purposes. This is useful for businesses that want the additional protection of a documented record for their movement of goods. Now let us talk about how the e-way bill is actually generated. The e-way bill is generated on the official GST e-way bill portal, whose URL is www.eway.billgst.gov.in. This is a dedicated portal maintained by the government specifically for e-way bill generation and management, separate from the main GST returns portal. The e-way bill is generated in form GSTEWB-01, and this form has two parts, Part A and Part B. Understanding the distinction between these two parts is absolutely essential. So let us go through each carefully. Part A contains transaction details, all the information about the consignment itself, what is being transported, by whom, to whom, at what value, and for what purpose. Think of Part A as the what and why of the movement. Part B contains transport details, all the information about the vehicle or conveyance that is actually carrying the goods, vehicle number, transporter identity, mode of transport. Think of Part B as the how and who is carrying it of the movement. Together, Part A and Part B together constitute a complete, valid e-way bill. Both parts must be filled for the e-way bill to be usable during transportation. We will go through each part in detail on the next two slides. Let us now look at Part A of Form GSTEWB-01 in detail. Who must furnish Part A and what details must it contain? The information in Part A must be furnished by the registered person who is causing the movement of goods exceeding 50,000 rupees, and it must be done before the movement of goods starts. This is important. The e-way bill must be generated before the goods leave the premises. You cannot generate it after the goods have already started moving. However, the registered person is not the only one who can fill Part A. Part A may also be furnished by a transporter if the registered person has authorized them to do so, or it may be furnished by an e-commerce operator or a courier agency on authorization of the consignor. What details must be entered in Part A? The GSTIN of both the supplier and the recipient, the place of delivery, including the PIN code. This determines the distance and therefore the validity period. Document details. Which document is backing this movement? It could be a tax invoice, bill of supply, delivery challan, or bill of entry. The value of goods being transported. The HSN code, the harmonized system of nomenclature code, which classifies the goods, and the reason for transportation, whether it is a supply, export, job work, exhibition, and so on. Now, once you enter all the details in Part A, a temporary number called the Part A slip is generated. This is a very useful feature. The Part A slip can be used later by either the supplier or the transporter to fill Part B and complete the e-way bill generation. The Part A slip is valid for 15 days, meaning you have 15 days within which to add the Part B details and generate the complete e-way bill. This separation is practical. Sometimes the goods are ready to move. The supplier knows all the transaction details and has filled Part A, but the transporter who will carry the goods is not yet confirmed. In such a situation, the Part A slip serves as a bridge. allowing the supplier to complete Part A without waiting for the transporter. Now we come to Part B, the transport details section. Part B is what makes an e-way bill complete and usable. Let me emphasize this clearly. An e-way bill without Part B is incomplete and invalid for the movement of goods. A printout that shows only Part A details cannot be used as a valid e-way bill. However, there is one important exception. If goods are transported within the same state or UT for a distance of up to 50 kilometers, the details of the conveyance may not be required in Part B in two specific situations. First, when moving goods from the place of business of the consignor to the transporter's place of business for further transportation, and second, when moving from the transporter's place of business to the consignee's place of business for final delivery. These are short, intrastate first and last mile movements, and filling Part B for such short hops is considered impractical. Now, who must generate Part B? There are four scenarios. First, if a registered person, whether the consignor or consignee, is transporting goods in their own vehicle, a hired vehicle, or a public conveyance, that registered person must generate the e-way bill after furnishing Part B. Second, if neither the consignor nor consignee generates the e-way bill, the transporter must generate it based on the Part A details. Third, in a situation where an unregistered person is supplying goods to a registered recipient, the registered recipient is considered responsible for the movement and must generate the e-way bill. And fourth, if an unregistered person is moving goods either in their own vehicle, a hired vehicle, or through a transporter, either the unregistered person or the transporter may voluntarily generate the e-way bill. What details go into Part B, the transporter document number? This is the goods receipt number, railway receipt number, airway bill number, or bill of lading number, depending on the mode of transport. And for road transport, the vehicle number is mandatory. Once both Part A and Part B are filled, a unique e-way bill number called the EBN is generated and shared with the supplier, recipient, and transporter. This number is the official identifier of the e-way bill. You can update the vehicle details in Part B multiple times. For example, if the vehicle is changed en route, but all updates must be made within the validity period of the e-way bill. A very important rule on cancellation: if you have made an error or incorrect entry in the e-way bill, you cannot edit or correct it. However, you can cancel it within 24 hours of its generation, provided the e-way bill has not already been verified during transit by an officer. If goods are not transported at all or not moved as per the details in the e-way bill, you must cancel it within 24 hours. This slide gives us a very helpful visual summary of all the e-way bill requirements, and it ties together everything we have learned in slides 6 through 10. Let me walk you through it. The starting point is always the consignment value. If the consignment value is less than 50,000 rupees, the e-way bill is optional, except in the two mandatory exceptions we discussed: interstate job work transfers and interstate handicraft goods transfers, where an e-way bill is mandatory regardless of value. If the consignment value is 50,000 rupees or more, the e-way bill is mandatory. And when it is mandatory, both Part A and Part B are compulsory. The only exception to filling Part B is the intrastate short distance scenario we discussed. Goods transported within the same state for up to 50 kilometers from the consignor's place to the transporter's place, or from the transporter's place to the consignee's place. This flowchart is excellent for revision and exam preparation. I encourage you to draw it out yourself and remember the key thresholds and exceptions. So far we have learned how the e-way bill is generated. But what happens when the circumstances of transportation change mid-journey? What if the vehicle breaks down? What if the goods need to be transferred to a different transporter? GST law addresses these real-world situations. Rule 138(5) deals with the transfer of goods from one conveyance to another. If goods need to be shifted to a different vehicle, whether due to a vehicle breakdown, an accident, or a transshipment arrangement, the consignor, the recipient, or the transporter must update Part B of the e-way bill before any further movement of goods. The same e-way bill remains valid. Only the vehicle details in Part B are updated. For example, if a vehicle breaks down on the highway, the transporter has two options: repair the vehicle and continue the journey using the same e-way bill and the same vehicle number, or arrange a new vehicle, update the vehicle details in Part B of the e-way bill, and proceed. In both cases, the original e-way bill continues to be valid. The transporter simply needs to ensure the Part B reflects the actual vehicle carrying the goods at any given time. In cases of transshipment, where multiple vehicles are used in the same mode of transport, the e-way bill must be updated at each transshipment point before goods are moved further. Rule 138(5)(a) deals with the transfer of goods from one transporter to another. If the original transporter hands over the consignment to a second transporter, they must update Part B of the e-way bill with the new transporter's details before handing over the goods. Here is a critical point. Once the new transporter has updated Part B, the consignor or recipient can no longer assign the e-way bill to any other transporter. The locking of assignment ensures there is no ambiguity about who is responsible for the goods. Let us understand this with the example on the slide. A consignor ships goods from city X to city Z. Transporter carries the goods from city X to city Y. At city Y, transporter A hands over the consignment to transporter B, who carries it from city Y to city Z. The same e-way bill is used throughout the entire journey from X to Z. Transporter A updates Part B at city Y before handing over to transporter B. Simple and seamless. Now let us talk about a concept that is very relevant for large transporters: the Consolidated E-way Bill, or CEWB. Imagine a transporter whose vehicle is carrying goods for 10 different consignors, going to 10 different consignees. Each consignment has its own e-way bill. So the transporter is carrying 10 separate e-way bills. Checking 10 separate e-way bills at every inspection point is cumbersome, both for the transporter and for the officer. The Consolidated e-way bill is the solution to this problem. A consolidated e-way bill is a single document that combines multiple e-way bills for all the consignments being transported in one conveyance. Instead of carrying multiple separate e-way bills, the transporter can generate one consolidated e-way bill, a CEWB, that lists all the individual e-way bills. This one document then travels with the vehicle and covers all the consignments on board. What is the legal provision? Rule 138.6 of GST says a transporter can generate Form GST EWB-02, which is the consolidated e-way bill, if multiple consignments are being transported in one conveyance. The serial numbers of all the individual e-way bills must be included in the CEWB. And importantly, the CEWB must be generated before the movement of goods begins. Now, who can generate a consolidated e-way bill? Only transporters can generate a CEWB. If the supplier or recipient is moving goods in their own vehicle, they cannot generate a CEWB. They can only generate separate e-way bills for each consignment. The CEWB is a facility designed specifically for professional transporters who carry goods for multiple parties in one vehicle. Continuing with the consolidated e-way bill, let us understand three more important aspects. Its validity, what happens if the vehicle number changes, and how multiple delivery destinations are handled. First, validity of a consolidated e-way bill. This is a frequently misunderstood point. The CEWB itself does not have its own independent validity period. Each individual e-way bill within the CEWB has its own separate validity, which is calculated based on the distance for that particular consignment. The transporter must ensure that each consignment reaches its destination before the validity of that consignment's individual e-way bill expires. So the transporter must keep track of all the individual e-way bills and their respective validity periods. Second, changing the vehicle number for CEWB. What if the vehicle number changes, for example, due to a breakdown? In that case, the CEWB must be updated with the new vehicle number before transportation continues. The transporter can use the Regenerate CEWB option on the portal to update the vehicle number. Once the new CEWB is generated, the old CEWB becomes invalid. So there is always only one valid CEWB at any point in time. Third, multiple delivery destinations. A CEWB can include multiple consignments going to different delivery locations. The goods can be delivered at different points along the route as per the individual e-way bills. So a single truck can make multiple deliveries during a single trip, and the CEWB covers all of them. Now let us talk about one of the most practically important aspects of the e-way bill, its validity period. Students, this is a frequently asked topic in examinations, so please pay close attention. The validity of an e-way bill depends on the distance that the goods need to travel within India. The rules distinguish between two categories of cargo. The first category is over-dimensional cargo or ODC, and multimodal shipments where at least one leg involves transport by ship. Over-dimensional cargo refers to cargo that exceeds the dimensional limits specified in Rule 93 of the Central Motor Vehicle Rules 1989, basically cargo that is exceptionally large or heavy. For ODC and such multimodal shipments, the validity is 1 day for a distance of up to 20 kilometers. For every additional 20 kilometers beyond that, one additional day is added. The second category covers all other cargo, the regular, everyday transportation of goods. For regular cargo, the validity is 1 day for a distance of up to 200 kilometers. For every additional 200 kilometers beyond the first 200, one additional day is added. Let me give you an example to make this clear. Suppose you are transporting regular goods over a distance of 650 kilometers. The first 200 kilometers gives you one day. The next 200 kilometers adds another day. The next 200 kilometers adds one more day. The remaining 50 kilometers falls within an additional 200 kilometer window, so it adds one more day. Total validity 4 days. When does the validity period start? It starts from the time the e-way bill is generated, called the relevant date. And how is each day counted? The validity is counted from midnight of the day following the generation. So if an e-way bill is generated on Monday at 3 p.m., the first day ends at midnight of Tuesday, and so on. There is also an important additional provision. The Commissioner can extend the validity period for certain categories of goods by issuing a notification under the first proviso to Rule 138(10). So, for certain notified goods or routes, the standard validity periods may not apply. What happens when, despite the best intentions, the goods cannot be transported within the validity period? Maybe there was a flood on the highway, a political strike, a vehicle accident, or a delay at a transshipment point. The e-way bill system provides a mechanism for extending the validity in such genuine exceptional circumstances. The key provision here is the second and third provisos to Rule 138(10). First, who can extend the validity? Only the transporter who is physically carrying the consignment at the time of expiry can request an extension. Not the supplier, not the recipient, specifically the transporter who has the goods. Second, when can the validity be extended? Only when the goods cannot be transported within the validity period due to exceptional circumstances. The rule lists 4 qualifying circumstances: natural calamities such as floods, earthquakes, cyclones; law and order issues such as curfews, riots, or strikes; transshipment delays, delays in switching from one mode of transport to another; accidents of the conveyance, vehicle breakdowns, or road accidents. Third, and this is critical, what is the time limit for requesting an extension? The request must be made within 8 hours of the e-way bill's expiry. You cannot wait days after expiry and then ask for an extension. You have an 8-hour window from the moment of expiry. How is the extension requested? The transporter must go to the e-way bill portal and apply for an extension by entering the reason for the extension, providing the remaining distance still to be covered, and updating Part B of Form GST EWB-01 with the current transport details. This is a very thoughtful provision. Real-world logistics is unpredictable, and the law provides a genuine relief mechanism for exceptional situations while preventing abuse by limiting it to specific causes and a tight 8-hour window. Once an e-way bill is generated, the other party to the transaction, either the supplier or the recipient, must be notified so they can verify the details and either accept or reject the e-way bill. Rule 138(11) tells us how the notification works. The details of the generated e-way bill will be made available on the common GST portal to either the supplier or the recipient, depending on who filled Part A. If the recipient or transporter has furnished Part A, then the supplier will be notified. And if the supplier or transporter has furnished Part A, then the recipient will be notified. Once notified, the supplier or recipient must accept or reject the consignment covered in Part A of the e-way bill. If there is an error, maybe the wrong goods description, wrong value, wrong recipient GSTIN, the other party can reject the e-way bill. If everything is correct, they accept it. But what if the supplier or recipient simply does not respond? Here is where the concept of deemed acceptance under Rule 138(12) comes in. If the supplier or recipient does not communicate their acceptance or rejection of the e-way bill within 72 hours of the information being made available on the portal, or before the delivery of goods, whichever is earlier, it is deemed that they have accepted the details in the e-way bill. So silence equals acceptance under GST law. If you do not reject within 72 hours or before delivery, you are presumed to have accepted the e-way bill and all the details in it. This is why it is very important for businesses to monitor their GST portal regularly and promptly reject any incorrect e-way bills before the deemed acceptance window closes. These next two slides cover some very important key points about the e-way bill that are frequently tested and are essential for practical compliance. Let us go through them carefully. The first key point is about the use of e-way bill information for GST returns under Rule 138(8). The details entered in Part A of Form GSTEWB-01 are automatically made available to the recipient on the common GST portal. This information can then be used by the recipient for filing their GSTR1 return. So, the e-way bill data flows directly into the return filing process, reducing the need for duplicate data entry. Additionally, if the information is submitted by an unregistered supplier or recipient in the e-way bill form, they will be notified electronically via mobile number or email if that contact information is available, so they are informed of the transaction. The second key point is about the validity of e-way bill across states and UTS under Rule 138(13). This is an important and reassuring provision. An e-way bill generated under the rules of any state or UT is valid across all other states and UTS in India. Once the e-way bill is generated, it will be accepted for transportation across the entire country. This ensures that a transporter moving goods across multiple states does not need to generate separate e-way bills for each state. One e-way bill is enough for the entire pan-India journey. The third key point is that the e-way bill is not valid without the vehicle number. An e-way bill is not valid for the movement of goods unless the vehicle number is mentioned on it. This is why Part B is so important. It contains the vehicle number. An e-way bill without the vehicle number is essentially an incomplete document that cannot be used for transportation. Continuing with the key points, let us look at two more important practical aspects. The fourth key point is about matching the vehicle number for inspection. During any inspection by authorities, the latest vehicle number mentioned in the e-way bill must be exactly the same as the vehicle that is actually carrying the goods. If the vehicle number on the e-way bill does not match the actual vehicle, even if the e-way bill is otherwise valid, it creates a compliance discrepancy that can result in detention and penalties. This is why it is so important to update Part B every time the vehicle changes during transit. The fifth key point deals with handling multiple invoices. This comes up very commonly in practice. Suppose a supplier issues multiple invoices to the same recipient, say 3 separate invoices for goods going to the same buyer. How many e-way bills are needed? The answer is 1 e-way bill for each invoice. Multiple invoices cannot be combined into a single e-way bill. Each invoice must have its own separate e-way bill. However, and here is where the consolidated e-way bill becomes relevant again. Once you have generated multiple e-way bills, one for each invoice, if all those goods are being transported in one vehicle, the transporter can generate one consolidated e-way bill covering all of them. So the sequence is one invoice, one e-way bill, but multiple e-way bills can be consolidated into one CEWB for transportation in a single vehicle. We have now learned when an e-way bill is required. Let us now look at the equally important question. When is an e-way bill not required? Rule 138.14 lists several categories of goods and situations where no e-way bill needs to be generated. The first category under clause A lists specific goods that are exempt from the e-way bill requirement. Let me go through each of them. First, liquefied petroleum gas or LPG when supplied to household consumers and to non-domestic exempted category or NDEC customers. LPG cylinders delivered to homes by gas agencies are exempt from the e-way bill requirement. Second, kerosene oil sold under the public distribution system, the PDS kerosene that is distributed through ration shops does not require an e-way bill. Third, postal baggage transported by the Department of Posts, that is, goods moved by India Post do not require e-way bills. Fourth, natural or cultured pearls, precious or semi-precious stones, precious metals and metals clad with precious metal. These fall under Chapter 71 of the Customs Tariff. Jewelry, goldsmiths and silversmiths wares and other articles under Chapter 71, except imitation jewelry, which falls under tariff heading 7117. These are also exempt. Fifth, currency. Movement of Indian or foreign currency does not require an e-way bill. And sixth, used personal and household effects. When someone is moving their personal belongings, no e-way bill is needed. You might wonder, why are these specific goods exempt? Most of them are either everyday necessity goods distributed through government channels or goods like precious metals and currency where the documentation requirements are governed by other laws or personal effects which have no commercial supply aspect. Beyond specific goods, Rule 138.14 also lists various situations where no e-way bill is required, regardless of the goods being transported. Let us go through these. Clause B, non-motorized conveyance. If goods are being transported by a non-motorized conveyance, think of a cycle rickshaw, a bullock cart, a hand cart. No e-way bill is required. This makes practical sense because tracking such small non-motorized movements would be disproportionately burdensome. Clause C, customs movement. No e-way bill is required when goods are being transported from customs ports, airports, air cargo complexes, or land customs stations to an inland container depot or container freight station for the purposes of customs clearance. These goods are already under customs supervision, and generating an additional e-way bill would be redundant. Clause D. Movement in specific areas. E-way bills are not required for the movement of goods within areas specifically notified under Rule 138(14)(d) of the state or UTGST rules. Individual states may designate certain areas, such as special economic zones or specific geographies, where the e-way bill requirement is relaxed. Clause E. Exempt goods as per tax exemption. If goods are exempt from GST as per the applicable exemption notifications, no e-way bill is required, except for de-oiled cake, which is specifically kept out of this exemption. De-oiled cake requires an e-way bill even though it may be exempt from tax. Let us continue with more situations where an e-way bill is not required. Clause F. Specified goods. E-way bills are not required for two categories of goods that are outside the scope of GST: alcoholic liquor for human consumption and petroleum crude, high-speed diesel, motor spirit, which is petrol, natural gas, and aviation turbine fuel. These goods are currently outside the GST net and are taxed under the old tax regime by states. Since they are not subject to GST, e-way bills under GST do not apply. Clause G. No supply goods. E-way bill is not required for goods where the transaction is treated as no supply under Schedule 3 of the CGST Act. Schedule 3 lists activities that are neither a supply of goods nor a supply of services for GST purposes. For example, services by an employee to an employer. Since there is no supply, there is no GST and therefore no e-way bill. Clause H. Customs bond and customs supervision. No e-way bill is needed for goods being transported under customs bond from an inland container depot or container freight station to a customs port, airport, or air cargo complex, or from one customs station to another. Also, goods transported under customs supervision or under customs seal do not require e-way bills. They are already under tight customs control. Clause 1. Transit cargo to Nepal or Bhutan. E-way bill is not required for the transport of transit cargo from or to Nepal or Bhutan. This recognizes the special trade relationships India has with these neighboring countries and the fact that such goods are not being consumed within India. We have 4 more exemptions from the e-way bill requirement in this slide. Clause J. Goods exempt from tax under specific notifications. 2 specific GST notifications are mentioned. Notification number 7/2017-CT-R dated 28th June 2017, which covers the supply of goods by the Canteen Stores Department. CSD to unit run canteens. And notification number 26/2017-CT-R dated 21st September 2017, which covers the supply of heavy water and nuclear fuels by the Department of Atomic Energy to NPCIL, the Nuclear Power Corporation of India Limited. These are highly sensitive government supplies that are specifically exempted from e-way bill requirements. Clause K. Defense movement. Goods transported by defense formations under the Ministry of Defense, whether they are the consignor or the consignee, do not require an e-way bill. Defense logistics have their own security protocols and procedures, and subjecting them to the commercial e-way bill system would be inappropriate. Clause L. Government and local authority movement by rail. When the central government, a state government, or a local authority transports goods by rail, no e-way bill is required. This covers government-owned goods being moved through the railway network. Clause M. Empty cargo containers. The transport of empty cargo containers does not require an e-way bill. An empty container has no goods value and creates no GST implications. Requiring e-way bills for empty containers being repositioned would create unnecessary compliance burden for the logistics industry. We have two final exemptions to cover. Clause N. Weighbridge movements within 20 kilometers. If goods are being transported within 20 kilometers from the consignor's place of business to a weighbridge, or vice versa, from the weighbridge back to the consignor, for the purpose of weighment, an e-way bill is not required. However, and this is important, such goods must still be accompanied by a delivery challan as per Rule 55. So the documentation requirement does not disappear entirely. Only the e-way bill is waived for this short specific movement. Clause O. Empty LPG cylinders. The transport of empty cylinders used for packing liquefied petroleum gas, when the movement is for reasons other than supply, does not require an e-way bill. So when empty LPG cylinders are being returned to the filling station or gas agency, which is not a supply, just a return of packaging, no e-way bill is needed. So to summarize all the e-way bill exemptions across slides 20 to 24, there are specific exempt goods under clause A and then 14 more situations labeled B through O where no e-way bill is required. You should be able to recall the broad categories: non-motorized transport, customs movements, exempt goods, specified goods like petrol and alcohol, Schedule 3 no supply situations, customs bond/supervision, Nepal/Bhutan transit, defense movements, empty containers, short weighbridge trips, and empty LPG cylinders. Now we move to the enforcement side of the e-way bill system. How the government verifies compliance during transit. This is covered under Section 68(2) and Rules 138(b) and 138(c). Step 1. Validation of documents under Section 68(2). The details of documents that are required to be carried during transit under Section 68(1) shall be validated in the manner prescribed by the authorities. This is the basic validation framework. Step 2. Authorization to intercept conveyances under Rule 138(b). 1. The Commissioner or an officer empowered by the Commissioner may authorize a proper officer to intercept any conveyance and verify the e-way bill, whether in physical or electronic form, for both interstate and intrastate movement of goods. Step 3. Installation of RFID readers under Rule 138(b) 2. The Commissioner shall ensure the installation of RFID readers at locations where verification of goods movement is required. Vehicles fitted with RFID devices will have their e-way bills verified automatically by the RFID reader as they pass through. No physical stopping needed. Step 4. Physical verification under Rule 138(b) 3. Even without RFID, a proper officer authorized by the Commissioner can physically verify a conveyance. If there is specific intelligence about tax evasion, even officers not normally authorized may conduct physical verification with appropriate approval. Step 5. Prohibition of repeated physical verification under Rule 138C(2). This is a very important protection for honest transporters. If a conveyance has already been physically verified at one location within a state or UT or in another state or UT, it cannot be subjected to another physical verification in the same state or UT during the same journey. Unless new specific information about tax evasion is received. This prevents harassment of genuine traders through repeated inspections. Now, let us understand what actually happens when a conveyance is intercepted for inspection. This is a step-by-step process. When a conveyance is intercepted under Section 68(3), the person in charge must produce the prescribed documents and devices for verification and must allow the inspection of goods. If the person fails to produce the prescribed documents, or if the proper officer decides a deeper inspection is needed, the officer records the statement of the person in charge in Form GST-MOV-01. Following this, the proper officer issues an order for physical verification or inspection of the conveyance, goods, and documents in Form GST-MOV-02. The person in charge must station the conveyance at the specified location for this inspection. Regarding reporting requirements under Rule 138C(1), a summary report in Part A of Form GSTEWB-03 must be prepared by the proper officer within 24 hours of issuing the MOV-02 order. The final report in Part B of Form GSTEWB-03 must be completed within 3 days of the inspection. The Commissioner may extend this 3-day period by another 3 days if required. These time periods are calculated from midnight of the date of interception. Additionally, under Rule 138D, if the vehicle is detained for over 30 minutes, the transporter may upload information about the detention on Form GSTEWB-04. This is a useful transparency mechanism. It allows the system to track cases of prolonged detention. After the inspection is carried out, the proper officer prepares a verification report in Form GSTMOV-04 and serves it to the person in charge of the goods and conveyance. What are the two possible outcomes of inspection? If no discrepancies are found, the proper officer issues a release order in Form GSTMOV-05 and the conveyance is free to continue its journey. If the proper officer believes discrepancies exist and the goods and conveyance need to be detained, an order of detention is issued in Form GSTMOV-06 along with a notice in Form GSTMOV-07 specifying the tax and penalty to be paid. This notice is served to the person in charge. We are now in the final stretch of this chapter. Let us understand the concept of blocking the e-way bill generating facility, a powerful enforcement tool under Rule 138E. What does blocking mean? Blocking refers to disabling a taxpayer from generating an e-way bill. When a taxpayer's e-way bill generating facility is blocked, they and anyone else acting on their behalf, including consignors, consignees, transporters, e-commerce operators, or courier agencies, will not be allowed to furnish information in Part A of Form GST EWB E-01 for the outward movement of goods. In simple words, if you are blocked, you cannot generate an e-way bill and therefore you cannot move your goods. This is a very serious consequence that brings business to a standstill. Under what conditions is the e-way bill generating facility blocked? There are three situations. First, for a composition dealer paying tax under Section 10. If the dealer has not filed the GST P-08 statement for 2 consecutive quarters, the facility is blocked. Second, for a regular taxpayer, if the taxpayer has not filed GST returns for 2 consecutive periods or has not filed the statement of outward supplies for any 2 months or quarters, the facility is blocked. Third, if the taxpayer's registration has been suspended under Rule 21A, whether voluntarily by the taxpayer or by the proper officer, the e-way bill generating facility is also blocked. The message is clear. GST compliance is not just about paying tax. It is also about filing returns on time. Failure to file returns blocks your ability to conduct business through the e-way bill system. This creates a very direct practical incentive for timely return filing. The final slide of Chapter 12 deals with how a taxpayer can get their e-way bill generating facility unblocked. Let us go through this step by step. The process begins with an application for unblocking. A taxpayer whose e-way bill facility has been blocked can apply to the jurisdictional tax official, the officer who has jurisdiction over their GSTIN, to unblock the facility. Next is the commissioner's discretion. If the taxpayer provides a valid reason, demonstrating sufficient cause for why the returns were not filed or why the registration was suspended, the commissioner may allow the taxpayer to furnish information in Part A of Form GSTEWB-01 again. The application for unblocking is made in Form GSTEWB-0C5. The Commissioner's decision is then communicated in Form GSTEWB-06 along with any specific conditions. Before rejecting an application for unblocking, the Commissioner must provide the taxpayer an opportunity to be heard. That is, the taxpayer must be given a fair chance to present their case before a final decision is made against them. This is the principle of natural justice built into the system. Finally, if the Commissioner of a state or UT does not take any action on the application, the request for unblocking is deemed to have been either accepted or rejected based on the context. This deemed decision prevents indefinite uncertainty for the taxpayer. So the unblocking process is: apply to the jurisdictional officer in EWB 05. The Commissioner may allow it conditionally through EWB 06 with an opportunity of hearing before rejection, and deemed acceptance or rejection if no action is taken. And with that, we have come to the end of Chapter 12, GST and the e-way bill. Let me give you a quick recap of everything we covered across. We started with the introduction to the e-way bill system. We understood the documents required during transportation. We dissected the e-way bill structure. We covered the consolidated e-way bill, and then we have covered the extensive list of goods and situations where e-way bills are not required. This is a very comprehensive chapter and a very practical one. In the next chapter, we will continue with more aspects of GST. Until then, revise what you have learned, and if you have any doubts, do revisit this video. Thank you so much and keep up the great work.